I have with me this afternoon Miss Crystal Mantecon. I'm so happy to have her here, and she is from FFAM, Credit Education and Restoration Division. She is our expert and go-to person when it comes to credit. She knows a whole lot of things in and out, and most of all, the tips on how to boost and improve your credit, especially if you're looking into buying or refinancing a home, especially in this very challenging times. Welcome to the show, Crystal. How are you?
Thank you, Janice. I'm really doing well. It's a busy time for sure. It's definitely a time to start getting your credit ready if you need to to get into your home, if that's your
Yes.
goal.
Absolutely. And I thank you for taking your busy afternoon to come talk to us today and educating our borrowers, our clients, and our viewers on how to boost their credit. Especially now, oh my goodness, the rates are still low and everybody's scrounging to get a hold of these low rates before they start coming back up again. Do you see this in your line of work that people are really trying to boost their credit to as little time as possible so they can still take advantage of these low rates?
Yes, yes, absolutely. It's just gone gung ho for months as everybody's trying to lock in these great rates right now. It's amazing.
Wonderful. So let's get right on to the questions here that I prepared for us. First question is, how do you find out if your credit would qualify for a mortgage loan before you apply for a mortgage?
Janice, that's such a good question for people to understand and know. Is really important. But having a reputable loan officer to talk with you and assess whether it's maybe time to pull your mortgage credit report to see what is on there is very important. It's good to talk with them and answer the questions that they might have about what you think might be on your credit report, because it might be a better solution to get a soft pull report and see what is on there before you get a hard inquiry for a mortgage.
What's the difference between a soft pull and a hard pull?
Very good question, too. So, a hard pull is when you are getting your credit pulled for a real time application for new credit. A soft pull will be more of a where you can take a look at your credit report but you're not necessarily applying for new credit. But a soft pull wouldn't have a negative effect at all. It would just give you the opportunity to see what's going on without that negative hit.
Great. Would you recommend them to check their credit through online services like Credit Karma?
Well, they can, but it's not necessarily the best as far as really getting a good gauge of where your credit is as far as credit scores go. If you wanted your mortgage scores, there are a couple of options for that. You could either talk with Janice and get your credit report pulled that way if you think that you're ready. Or you can look at another account like myfico.com. Fair Isaacs Corporation is the data analytics company that the credit bureaus contract with. So they have a deal with them. So you could purchase your credit scores and reports through them on myfico.com and get the real scores at that given time.
What about revolving credit cards? I'm often asked this a lot. Should they pay them off before applying for a mortgage?
Well, a lot of people think that paying your balances down to zero is the best thing to do. But actually, it's better to hold a little bit of a balance on your credit cards when your credit is being pulled for your mortgage. And I usually recommend you have them between 1 and 10% of your available credit limit. This ratio is actually called the revolving debt utilization ratio, and it does have an impact on your credit. It's one of 6 components of the what you owe category that makes up your credit profile. And anything over 30% is kind of nicking your credit to an increasing degree as you go higher and higher. So try to get your balances as far down as possible. If you can't, that would be my advice.
Yes, it makes a lot of sense because once it comes to me, when I read the credit report, we go through all of these things as well. And sometimes it's too late because they've already paid it all to zero. So now we don't have any history, or now we may need for them to use them so that there's some sort of an activity on their credit report as well. So some of these things are very specific to each individual person and their history and how they have been using credit over time, because history is also helpful if you have been very diligent with your credit and paying your bills on time.
Yeah, history is the biggest portion of your credit, and that's on-time payments. And then sometimes people have derogatory, like collections, charge-offs, late payments. And so that's something that you may want to take into consideration too.
Yes, and please don't do anything such as large purchases without telling your mortgage broker if you're already in the process of refinancing or buying a home. I get this shock a lot of times, Crystal, and it's so hard to get back on track when this happens, or sometimes it could jeopardize the loan entirely.
I would say the best options, if you absolutely must get a new car before you're getting a mortgage, is to get pre-qualified with a bank or a credit union. And that way they only pull your credit once.
And I have to add, it just doesn't affect your score, but your debt to income ratio. Now you have a new payment that's going to add on to your monthly payment. And sometimes you may go over without knowing, and that could also mean that your loan can be disqualified or denied for that reason. So please be careful. Always talk to your mortgage broker if you already are in a file or in an escrow. That way, nothing can be jeopardized as we are finishing or closing your loan.